Boom! What's going on, guys? Welcome into your Energy News Beat here on this gorgeous Tuesday, January 19th, 2021. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsBeat.com. Stuart Turley, how you doing today?
It's a beautiful day in the neighborhood, and we are packed.
We are packed today because markets closed. I didn't know what to do yesterday. I was like tweeting my thumbs around 1 o'clock. Markets closed, so we've got a long show. Catch you up on what happened over the weekend. You can check out that on the rundown. But before, guys, we dive into the U.S. equities markets, just subscribe to the Energy Newsbeat. A lot of ways to do that. Subscribe to this YouTube channel. Turn on the pesky notifications button. If I was a 16-year-old making millions off YouTube, I would say smash that like button as well. But I will refrain from doing that. You should also check out, if you're interested in just, what I call stream of consciousness news, if you just are a news junkie and need everything, the best thing to do is go to our homepage, EnergyNewsBeat.com. Click the little bell icon, sign up. You will get every story we push out pumped straight to your desktop. The best way to stay updated on all of your energy market news. Speaking of today, last day of the Trump presidency, and so first off, we saw a lot of pardons, which was pretty interesting. Lil Wayne's free now, good to see. Hopefully we see a little, some more music come back in. But as we move from Trump to Biden, stocks, it's interesting right now. The narrative right now is with Janet Yellen getting basically confirmed today. I watched some of that confirmation hearing on CNBC this morning. Stimulus is going to come in at least $1.9 trillion, probably maybe that $2 trillion. I don't know. I could see it increasing. So on the backs of that, we saw markets, I would say slightly rise. I think there's some tentative optimism around maybe some of the vaccine stuff. But to give you a rundown of the numbers here, top line, 0.8 of a percentage point for the SPY. Nasdaq was up 1.5 percentage points, which is interesting because remember, with Democrats coming in, it was thought that Section 230, which it basically makes publishers not liable, which is tricky for us because, Stu, we're publishers. So this rule affects me too. But with that rule probably going to be changed, tech companies are going to get hurt by that. So it's very interesting to see as we move into this new administration, tech's up 1.5 percentage points today. Nasdaq or Dow Jones on the backside, 0.3 of a percentage point on the upside. So a couple things. There's one thing here. If you want to know the Fed's policy and what you think is going to happen with monetary policy, all you have to do is you just listen to these people. Jay Powell's been saying for months, we don't care about inflation. Rates are going to stay low. We're pumping more into the economy. Get this. This is Janet Yellen in her confirmation hearing, incoming U.S. Secretary of Treasury. Neither I nor the president-elect proposed this relief package without an appreciation for the company's debt burden. But right now, with interest rates at historic lows, the smartest thing we can do is act big. Ooh, okay, big. That means traders love that news. That means that stimulus bill going up. She said these in prepared remarks. She also said, I believe the benefits will far outweigh the costs, especially if we care about helping people who have been struggling for a very long time. So what does this mean? New administration, more money is going to be printed. I looked this up stat. 37% of all the cash that has been printed in the entire, or 30% of the new cash that being printed has been printed since March. 35%, 37% of the money supply has been added since COVID. Unbelievable what's happened, but look for that to continue, and that's why I think you saw markets stabilize a little bit. Normally when you move from a Republican to a Democratic administration, it's going to see a nosedive in some of those major industries. I think why we're seeing an increase is because specifically of, this stimulus is probably going. I'm getting $1,400, so not that I need it, but I'm interested. I'm down. I'll take it. I'm that guy with the handout. Yes, please. But, so enough on that front. I wanted to harp on because as we change administrations, the fundamentals and how we think about the economy is going to change. We used to when we used to think about crude oil a certain way, then COVID happened, then OPEC happened, and now we have to change the way our fundamentals are. So that's, I spent a little more time on that today, but I wanted to just give an overview. This is how I think the sentiment's going to be shifting as we move from administration. On the fun stuff, crude oil side, we're up 1.5 percentage points today. 53.18 is the top, currently trading 52.97. It's just, bulls are back in town. I've been skeptical that we would continue to see a rise like this, but I've never been happier to be wrong because higher oil goes, more people get back to work. E&P, in terms of our in terms of its sector select breakdown from the S&P, is up like 18% this year. So just unbelievable. Back into the curve, 5092. That's a 1.3 percentage increase. So we're still sitting in that contango market. Natural gas, $2.54. Wipes 2.8% off the index. Why? Well, I kept telling you guys, natural gas will weather trade. Natural gas will weather trade. Well, partly, if you follow the weather's almanac, we were entering what was expected a polar vortex, which is a cold snap that develops in the atmosphere above the North Pole and sends harsh blasts of freezing temperatures throughout the northern hemisphere. Well, guess what? They called it off this weekend. So futures open, boom, tank, $2.50. So guys, natural gas is turning into a weather trade. If you're going to trade natural gas, watch that, because we're talking polar vortexes here. When was the last time you thought on this show you would hear polar vortexes? I don't know, but that's what's driving natural gas markets right now. Back into the curve, $2.83. So that was only down 1.5%. So we're still in backwardation there, or normality. E&P, or XOP, which is our E&P securities contract, up 1.8 percentage points, 70.56. Holy smokes, to $70 for XOP contract. That's $1.29 increase. Oilfield services off the back of Halliburton coming out with their earnings today, which will cover 179.89. That's 0.9. That's 90 cents on the upside, or about a 0.5 percentage point on the index. Let's go ahead and look at some of our biggest movers on the downside. Guys, a lot of natural gas companies outside of CDEV, they're shale, but Comstock was down 3 percentage points. Range Resources down 6. CNX down 6. EQT down 7. Polar vortexes causing these companies to crash. Unbelievable. I'm telling you guys, weather-based trades, watch out for them. On the upside, still some good numbers though, but we were 2 percentage points on the upside. Talos Energy up 10 percentage points. Phoenix Minerals up 13. Next Decade Corporation up 16. American Resources Corporation up 18 percentage points. Stu, internationally, you're going green on me. Holy smokes.
I went green today, man. By the way, there is not only a polar vortex, there's a space-time continuum going on, because everything we know about fundamentals is gone. I have no clue anymore. Just throw me into the space-time continuum. Michael, we've got a great stack up of green, and I'll tell you what, it's kind of fun. We're having some real serious fun. Here's the first. Okay, in our beloved art department, I got a green printer today. Yep. Now, if you take a look at VW, it goes head-to-head with Tesla in China with new electric SUV. Here's the bottom line in this from the author. FAW Group at 199,000 won, or 30,800 after subsidy. So this goes back into the question, are we comparing Teslas to VWs on the same price scale? Because Tesla gets a subsidy, VW doesn't, so they're coming in really low. So when you're shopping for a EV or SUV, be careful. You may not get a tax deduction depending on the manufacturer. So
interesting. So it's literally, so only Tesla gets it.
Yeah, in this group.
This has nothing to do with. This isn't even talking about the whole regulatory credits thing.
No.
Oh man, good for Tesla. Dump Tesla call options. Price target 3,000.
I read that and I was like, ooh, fine print. Okay, we're gonna go to the next one. We're traveling around the world. Nothing up my sleeve. Here we go. We got Toyota in France. I got tickled at this one because they are trying to get ready for the 2024 Winter Olympics in France. And they have got 80 million euros or $97 million to help persuade French taxi drivers to move to hydrogen. 10,000 hydrogen taxis by 2024. I thought this was really interesting. Are they going to use this for bribery money? Or are they going to go to the burlesque show with these taxi drivers and kind of get them all looped up for this hydrogen car?
Well, I know you love hydrogen, don't you? You've been a hydrogen, you know.
But if you could see this picture, it's all cut in half and everything as a cutaway. That's going to be a really lousy ride in a taxi. I'm just kidding. It's anyway. No, I think it's going to be really funny. They only have 4 hydrogen filling stations right now. They got to build 20. It takes 3 minutes to fill a car as opposed to an electric. I'm big on hydrogen.
No, I mean
Okay.
that's the one big thing with the electric vehicles is the distance charge. I mean, there's a lot of different things with the EV style of it, but no, very fascinating. It's if you're gonna, I don't mind hydrogen vehicles. Let's see if it can work. Because if it can, let's
You're
give it a
still
shot.
going to you're still going to need a lot of fossil fuels in order to get that hydrogen around. You're still oil is here to stay.
So, and does
Bullish.
this move in tandem? Because another one of your stories has to do with the French National Bank getting
Yep.
out of fossil fuels. Very interesting. So we've got all of this circulating under one, right? Run me that one down.
I got another one here under the EU as well too. So here we are. We're still in France, and there we are. The Banque de France. Okay, Banque de France. So it has French bank, central bank to exit coal. They're going to cap the oil and gas investments. The Bank of France manages 22 billion euros or 26.6 billion of its own portfolio investments. They are going to go to threshold to zero by the end of 2024. They are cutting fossil fuels out totally. So they are not only going to be drinking the Paris climate change accords, they're going to be making sure it's not funded. I mean, any of the oil and gas. So
yeah,
now,
and it's just, well, you're gonna get out of the plastics. You're gonna get how do you de-expose yourself from oil and gas as a bank that you don't exactly. You see, you hit the nail on the head.
Okay, here's another one. Are you ready? Coming around the block. We're going to the EU, the carbon markets. You and I last week had some really funny shows on the carbon credits that are out there. And what is going to stop the abuse in companies that if you price in the carbon credit that you get, right? If you're having to pay for carbon credits because you're still polluting, and you got to buy these credits to be carbon net zero to your shareholders. Am I making myself clear?
Yes.
Okay. What happens if you cannot clean up your act and you price in your carbon credits and pass it on to your consumers? Oh, there's abuse for the system. We are net zero, but we're going to abuse the system.
Wait, so you're telling me businesses pass off expenses to their customers?
Wow, imagine that. So guess who's going to be paying for net zero?
Well, we are.
Yeah, you got it. I'm really tickled at this one. The cost of emitting a ton of carbon had tumbled down to $38 in this one. When we talked at Norway, I believe Norway's at $250 last week for their carbon. Holy smokes. So anyway,
it's always going to get passed down, Stu. At the end of the day, the consumer always gets it good.
And the lower income folks don't have a choice, and they get hit hardest.
Yes.
That's what I want to fight.
Speaking of disproportionately impacted communities, high energy costs disproportionately affect poor people. 100%.
We want to get powers of people at the lowest cost thing. Let's get 1.2 billion people out of poverty.
1.21 gigawatts worth of energy.
Okay.
Anything else today on the international side?
I got two stories. Okay. First one, I ran this one this morning, and you notice Trudeau and the Alberta Prime Minister are sitting there nice and comfy, and they're looking down, and he goes, Keystone XL may be sold for scrap if Biden moves to kill it. And that makes sense because Alberta had put in $1 billion of taxpayer money into the pipeline. So they got to recoup some of this if Biden shuts it down. Okay, so I ran this at about 5 o'clock this morning. Okay, right before our show today, this one comes popping in. Notice the socks. I don't know if you can tell right here, but Trudeau, it's the same time in the meeting, except his socks are all striped and everything. So these guys have some real horsepower to print Trudeau's socks, all these different colors. But this title is Canada is pressing Biden administration for Keystone XL pipeline to keep it open.
Well, yes, because that was the news that dropped this weekend, that Biden, one of the first things he's going to do is cancel the pipeline. That's why they were interested in selling it for scraps. But as you mentioned, Alberta has pumped $1 billion in taxpayer money, which is Canadian federal money. It's not Alberta money. So Trudeau is sitting there like, one, I need to get all of my oil out of my country. Two, I've pumped billions of dollars, literally, into this program, and all of a sudden, with a stroke of a pen, Joe Biden's not even going to consider the fact that all of this oil has to go somewhere. It's got to go on rail. It's got to go somewhere. It's not like we're diverting.
There's two things. Yeah, there's two things, Michael. Canada produces the oil at the best least impact to the environment than any other country in the planet. The other thing is that they are a landlocked nation with their oil, and this is coming out of the oil sands, coming straight down, and this would keep us energy independent because of that heavier crude that would come out of that. We would be able to keep people from telling us what to do with our own energy policies. Big mistake.
Justin Trudeau would be left of Joe Biden if he was an American politician, and he is the one begging Joe Biden to keep it open. If that's not all the proof you need about why we need to go and access pipeline, I don't know. I mean, seriously, Prime Minister Justin Trudeau, considered a very liberal Canadian Prime Minister, he wants to keep it open. That's where the disconnect, and we've talked with this from our friends Terry and Heidi up in Canada. They're big. This just boggles my mind. Why that this right here is where I think people, when they talk about I'm for regulations, because clearly Canada has some of the strictest environmental regulations, and guess what happens because of that? As Stu said, they produce the least amount of impact per billboard. So regulations work, but when they're a bad faith attempt and it's purely politics, that's when you lose me, and that's what causes this schism that I see.
Oh, absolutely. But Alberta contributes a gigantic chunk back to Trudeau in the way Canada does their provinces, and Alberta pays a gigantic amount of money back to Canada to pay for the other provinces. So it's in Trudeau's best interest to get that oil down to here to us.
Yeah, it's where you lose me. It's where you begin to lose me, and you okay. Well, so now this is okay. You're not attempting to actually, people care about facts, except when it wants to change their opinion. No, I don't know.
No, I'll agree with some things with the Biden administration, and I will disagree with things. And if it's helping humanity, I want to talk about it in a positive way.
Yep. Anything else?
I'm wiped out.
No, and let's go ahead and move over to the U.S. shale site. The one story I clearly have, incoming president-elect, tomorrow President Joe Biden, is going to cancel the XL pipeline. I don't know if the Keystone XL pipeline. Don't know if this is to kind of just piggyback off what Stu was saying. I don't know if this is necessarily unexpected. This has been a political toy for a while now. Irreverent of what's going on with the Dakota Access Pipeline. So, not that I'm shocked here, but we've spent enough time talking about it. It's just not good in my opinion. I thought this was really interesting, Stu. SpaceX, we love, as you call him, Elon Musk, not only owns Tesla, but owns SpaceX, which is a private space exploration company. They bought 2 deepwater rigs last year and are converting them into floating launch pads, okay? The rigs are currently in the port of Brownsville, Texas, near SpaceX Starship Development Facility in Boca Chica, Texas. Rigs have been renamed Deimos and Phoebus, presumably in homage, according to the Martian moons. I'm just reading off here right now. Here's what they bought them from. Public records show that Valaris, the ultra-deepwater semi-submersible oil rigs 85 and 8501, were sold for $3.5 million each. Remember, they were part of a chapter, basically a 361 chapter, or a 313 chapter 11, which is basically a complete liquidation of all assets. SpaceX got in on it. It's pretty good, Stu. $7 million for 2 floating rigs. This is kind of cool. I don't think Elon Musk gets the respect he does. This dude's firing firing on all cylinders up in the brain.
It puts a whole new perspective on the term floater.
It does. So it'll be very interesting. But hey, so all these deep water, all these offshore companies that are about to go bankrupt. Hey guys, you can sell all your rigs to Elon Musk. He'll buy them at a discount. Well, welcome to earnings season, guys. The last story we got to cover is Halliburton kicks off our total oil field earnings season, specifically oil field service. If you guys don't remember, that's how it generally goes. Oil field service drops early in the beginning. We're gonna get Schlumberger, and Baker Hughes here today. We'll also get this week we'll get Liberty as well, and then we'll start rolling into some of the more standard names. I guess, Stu, before we cover this, do you have any predictions? This is, because remember, this is quarter 4 2020. So this is the last quarter, where all these earnings we're going to be seeing are the last quarter of 2020. Are there any themes you think we're going to see? Do you have any predictions?
Yes. Continued write-downs of anything squirrely on anything that they can get out of the books, they're going to get out of the books. So you're going to see continual write-downs on things.
Yeah. Personally, I think you're going to see a very upbeat quarter 4 presentation because quarter 4 is going to look a lot better than quarter 1, quarter 2 did in early 2021. So they're going to spin what generally is the year-end analysis into, hey, oil's $53, drill. I don't know that's going to be the case. I'm very interested to see what these, especially these valuations right now last time these CFOs spoke on these calls, their valuations weren't that good. Now their valuations have come up, which will be very interesting. But Halliburton kicks us off today. Top line numbers: total revenue $3.4 billion, beat analyst estimates of $3.1 billion. While adjusted net income was 3 cents above the estimated 18 cents per share, according to refined IBES data. They also said that they expect their revenue from business to rise 3 to 5% in the current quarter from the fourth quarter, though operating margins are expected to fall by 150 to 200 basis points. Completion of the production business were up 15% in the fourth quarter. Somebody's completing, which is good. This is what I thought was interesting. We always talk about American versus international split. I mean, it's pretty clear Halliburton's an American company. North American revenue jumped 25% from the third quarter, while international only rose 0.4%. So very interesting on that front. Profit slumped 43% and revenue tumbled 37% from the fourth quarter of 2019 and are still way below 2001 levels. Again, Baker Hughes, Schlumberger, they're scheduled to report later in the week. I mean, oilfield services, they're going to paint this as a really nice picture, obviously, because they're going to start making a little more money. So watch it. I mean, Halliburton, to give you an idea, is down today. Oh, yikes. I think I accidentally pulled it down here. What's Halliburton working at here? Halliburton is, let me just pull it up here.
Yeah, let me look as well.
I think they were down about 3/4 of a percentage point. Let's see here. Yeah, 3/4 of a percentage point for Halliburton. So markets obviously didn't like the fact that international revenue didn't raise that much. And that's what I'm interested in Schlumberger. Obviously, they've sold their North American frac business, so you don't want to necessarily consider that. It's also going to be very interesting to see Liberty, how their earnings are going to look. Well, I actually don't know. I'm not sure about that. I don't know if the deal's quite closed yet. We might have to wait till quarter 2.
Right. It looks like they did pretty good. Of the management of good people over there. They talk about taking care of business. They do a good job.
Yeah, I mean, it's tough to be running an oilfield service company right now, so our heart goes out to all those people. Holy smokes, Stu, we're 23 minutes into this bad boy. We got to wrap this up. You got anything else before we let these people go?
No, it's a great day in the Ozarks, and we're having fun.
It's a great day, guys. With that, we're going to let you get out of here. Get back to work. Finish your beat. Thank you for checking us out. Energy News Beat here on YouTube. For Stuart Turley, I'm Michael Tanner. We will see you guys on the beat, and see you tomorrow.